Hello, Maverick traders. This is Rob Reinhold. It is November 17th. We are right ahead of the Thanksgiving holiday. And again, I cannot believe that we are almost done with 2022. It has just flown by. So let's talk about today. Today was a pretty interesting day. And what I really want to focus on is this cluster of days we've had over the last 4 days this week. But first off, let's talk about the big news. The big news was Fed President Bullard gave a speech, and he was much more hawkish than the market wanted to hear. He talked about interest rates needing to get up to 5 to 7% for the market to cool off. That's much higher than the market is expecting, and the market sold off on that news. However, the market recovered quite a bit, and you can see by the end of the day, the Dow was actually flat. It was down over 1% at one point. The S&P was almost flat, down 0.31%. It was also down well over 1%. NASDAQ closed almost positive. It was positive at one point. That was down about 1.8% at one point. So we got big reversals. And if you see in the charts, we just had these nice reversals. So we had a gap down in the morning, and then we had buying throughout the day. Now let's take a look at what we've seen over the last 3 days. We've had gap ups and seen selling. So anytime it got up into this area, people wanted to sell. However, we can see that down here, people want to buy. We are stuck. Now, this was our call over the weekend that we were basically going to consolidate last week's gains and really not go anywhere this week. If we take a look at the NASDAQ, same thing. I want you to take a look at this cluster of 3. These were not great candles. We gapped up, sold off. Gapped up or gapped down, sold off. This morning, gap down, we buy. It's just telling you that the market isn't really wanting to go anywhere at the moment. And if we take a look at this heat map, you can see it is salt and pepper. It is half up, half down. Not a lot going on here. So let's go to our market outlook. We are at a +2 on our monthly outlook, meaning we think over the next month the market is likely to rise higher. However, for the week, we're saying we probably need to consolidate these gains. We have one more day left for this week. And if the market goes up about 0.5%, 1% on Friday, it will be a flat week overall, just like we expected. We'll have to see what happens Friday. But remember, we are now going into Thanksgiving week. Thanksgiving week is the highest likelihood of there being an up week for every week during the year. That's what the Stock Traders Almanac says, that this is the most bullish week. However, before you all get excited, it has one of the lowest average returns. So basically what it's saying is most years it's up, but it's not up all that much. We expect that to continue this year. I could easily see next week being a slightly positive week just due to the holiday tailwinds. So overall, as you can tell, I am moderately bullish here, but we had a big run last week. I want things to come in. I want things to calm down. I want things to pull back or base and give me an opportunity to jump in. I'm not sure we're quite there. Yes, we got a green candle today, but it's not really telling us it's time to buy right now. It's really just telling us bide your time. Once we get a little bit more confirmation, we can get more bullish. But if you are looking to enter new trades, I think you need to be selective here. One place you really don't need to be selective is in energy. Energy looks great. Even though oil took a hit today, the energy stocks really didn't care. This is FTI, and you can see just a beautiful chart pattern. We are now up against resistance, and I want to show you just these last candles. We had gap up and run, gap down and buying, gap down and buying. There's people out there buying this. This thing likely breaks higher. I think you've got to go out to 13 if you're going to go to the December expiration. And I think you can take a look at like a 12, 13, either a vertical or diagonal spread. I think that actually looks like a decent trade here. Another chart I came across that I just love the candles. This here is Starbucks. Starbucks had a big breakout, and you can see this is a pretty long-term resistance if you go further back in the chart. We had this nice break higher, and we got our reversal candle. But take a look at those last 2 candles. Gap down, run up. Gap down, run up. I love when things make a new swing high, and then when they come down with bullish candles. That is like the clearest sign that there's still people buying. The only reason Starbucks is down over the last 3 days is because of the morning gaps. If it wasn't for the morning gaps, this stock would likely be up at 100. So I'm just waiting for one green candle to give me a higher close than the previous day, and then I'm ready to go on this one. I've got 100 as a target on this one, 95, 100 bull call spread for probably about 2 weeks, or there's tons of other options trades you could take a look at. On the bullish side, I like the things that have been giving me green candles on these red days. For a sideways play, here is EDU, New Oriental Education. Now, this is a very volatile stock. Typically, this thing will run 5, 10, 15% in a week. It has been showing us that same volatility, basically a range from 20 up to 30. That is a 33% move that it's been making a couple times over the last couple of months. Here we are, we're smack in the middle. Moving averages have flattened out. It tells us it's likely to stay in this range. You can do a pretty wide one on this because it's so volatile. I like the 20, 25, 30. Just straight call butterfly for December and let this thing go. Take half your profits at some point, and then you could leave the rest for expiration. For bearish setups, this is one I entered yesterday. This is Meta, and I talked about this over the weekend, and I said, look, I love these stocks that have had these huge rallies. So we've gone from 90 all the way up to 120. That's 30 points that Meta has put on. That is 33% it has put on in the last 2 to 3 weeks. Now, yes, it's lost a lot, but whenever you have these stocks that are in these really strong downtrends, all you're waiting for is these rallies. You're just waiting for rallies and bases to sell into. That's all you're waiting for. And then once you get them, go ahead and jump in. I did the 110, 115 bear call spread, a very wimpy trade. I don't think the market is all that bearish here, so I think you want to be less bearish than normal. This is a great pattern, but I think you want to be mildly bearish at best. I still think a 110, 115 bear call spread is a decent play here. To wrap this up, we are still consolidating last week's rally. Today's candle was kind of the confirmation that we're just going to stay in this area. We could have broken down today, and we could have had a really nasty, ugly day, and it would have looked more like a pullback than a base. Today's green candle solidified that, hey, we're just going to stick around here at the top of this range. Tomorrow we have 2 small economic reports, existing home sales and LEI, nothing all that big, and we actually still have a few decent-sized companies reporting before the bell, JD.com and Foot Locker before the bell. Well, that is it for the Market Roundup. Just a reminder to our Maverick traders, every year we take the whole entire week of Thanksgiving off, so there will not be any videos, live classes, or anything this week, and we will be back the week after. Thanks, everybody. Goodbye.